So today I thought it would be useful to just talk about furnished holiday lets and the action that you probably should be taking if you own one of these. In March 24, the government announced that they were going to abolish the concept of furnished holiday lettings for tax purposes. So what does that really mean? Well, at the moment, if you've got a furnished holiday let, it does qualify for some quite generous tax relief. For example, you claim business asset disposal relief on the sale. So they tax like a business if you were to sell them. You can also claim business asset rollover relief and holdover relief. It's qualifying earnings for pension purposes. You can claim capital allowances, which you can't on usual residential property lets. And you can also, you also haven't got the restrictions with the interest. So in terms of what that means, from April 25, the concept of furnished holiday lets is no more. And so it'll just be taxed like a normal residential property. So for those people that have got furnished holiday lets, there is some tax planning opportunity and some things that you should be thinking about doing now before the changes take place. If you are perhaps considering ceasing your business, then you probably should consider doing this before the 5th of April 25, because any businesses that cease before the 5th of April 25, or furnished holiday let businesses, there's a provision which means that the capital gain could potentially still attract business asset disposal relief for up to 3 years after cessation. Whereas if you finish after the 5th of April 25, that won't apply. You'll just be taxed like a normal residential property gain. If you're perhaps considering transferring, as part of your inheritance tax planning, the property to a family member, then you may want to consider doing that as well before the 5th of April 25, because then you might be able to hold over the gain. And if you haven't made a claim for capital allowances, then you should certainly think about looking into doing that before the 5th of April 25. If you've got some qualifying expenditure on either the purchase, a refit or refurbishment of the property, then so long as you've claimed the capital allowances before then, you can continue to write down those allowances against the profits moving forward, even though it won't be treated as a furnished holiday let. If you hold the furnished holiday let jointly between husband and wife or in a civil partnership, and you're currently declaring the rental income on a split, which is anything other than 50-50, then you might want to look at your position quite carefully and sooner rather than later. The automatic treatment for the taxation of property, which is held jointly with husband and wife, is 50-50, regardless of the beneficial interest in the property. So if you wanted to tax it, say 90-10, if one of you is a higher earner, you'd need to make a declaration of trust and also file a Form 17 with HMRC to ask for the taxation to follow the beneficial interest in the property rather than the automatic 50-50 split. So to summarise really then, what do you need to do now? Make sure you've done a capital allowance claim if that's appropriate to you. If you're thinking about selling, gifting or ceasing your business, then get some advice. The timing of that's really critical. And if you did want to split your profits in a different percentage than 50-50, then also take some advice, because you need to make sure you've taken the necessary action as soon as possible and in good time. If there's any other things that I've talked about today that you'd like advice on, or you'd just like to give us a call and talk about your personal situation or your holiday let and what the changes mean for you, then please get in touch. Thanks for listening.